Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 9th, 2025. I am Luna.
I am JPMorgan. That's right. This report really distills a pretty tumultuous 24 hours. It shows those immediate market shifts, but also gives us crucial takeaways for investors trying to navigate all this uncertainty. It's a fascinating snapshot, really, of how major trade news and Fed news can ripple through the economy.
Okay, let's dig into this, maybe starting with that initial market snapshot. It looked like a bit of a mixed bag.
It was, yeah.
The Nasdaq composite, it ticked up slightly at 0.03%, 20,418.46. But then the S&P 500 edged down 0.07% to 6,225.52.
And the Dow Jones Industrial Average fell a bit more, 0.37%, ending at 44,240.76.
So what was driving that sort of initial turbulence? What did it signal about how investors were feeling right out of the gate?
Well, it signaled a pretty nuanced sentiment, I'd say. You had technology, healthcare, energy materials, and industrials actually outperforming.
Oh, interesting.
Yeah, which might suggest, maybe a rotation into sectors people see as less sensitive to immediate rate worries, or perhaps they're anticipating increased demand there. Chevron, for example, jumped nearly 4% after a pretty upbeat analyst call.
Okay.
Meanwhile, you look at the bond market, the 10-year Treasury yield climbed up toward 4.4%.
Yeah.
So that reflects some underlying anxiety. But then you also had Bitcoin approaching $109,000, showing there's still an appetite for risk out there, in certain assets. So it was a real push and pull. Cautious moves in traditional markets, but still that hunger for riskier plays.
Right. Okay, now here's where it gets really interesting and potentially pretty contentious. President Trump announced a staggering 50% tariff on all imported copper. Wow.
Yeah.
What was the immediate fallout from that?
Oh, the reaction was instantaneous.
Yeah.
And dramatic. U.S. COMEX copper futures, that's the benchmark here, they surged over 12%.
12%.
Yeah, to a record high. It was unprecedented. And it really reflects these fears of, immediate supply disruptions and, of course, rising input costs.
Yeah.
This is critical because, remember, the U.S. imports roughly half its copper.
Half, right.
Exactly. So affected nations like Chile, Canada, Mexico, they've already voiced concern. And you saw shares of Freeport-McMoRan, the U.S. copper giant, spike over 5%.
So beyond just that initial price surge, what's the sort of longer-term risk here? For industries that really rely on copper EVs, construction.
Absolutely. There are big risks. This isn't just about the raw copper price. It's a ripple effect. It could reshape everything from, like you said, electric vehicle manufacturing to home building, higher costs for imports. Look, it could fuel a push for more domestic manufacturing.
A renaissance, maybe?
Perhaps, eventually.
Yeah.
But that's a very long-term play. In the short term, it means pain for a lot of companies.
Okay. And as if trade tensions weren't enough drama for one day, President Trump also very dramatically called for Fed Chair Jerome Powell to resign immediately. He criticized Powell's policy decisions, even the Fed's headquarters renovation cost, which was quite something.
Yeah, that was a direct hit.
How did markets react to that? And what's the bigger picture significance of this kind of political pressure on the Fed?
Well, look, these remarks, they really underscore a significant escalation of political pressure on the central bank. Investors were definitely alarmed. There's always that fear about eroding the Federal Reserve's independence, which everyone sees as crucial for stable monetary policy. You saw it in the markets. Treasury yields did jump briefly overnight. That reflects the uncertainty. It also fuels some speculation, about maybe a more dovish Fed replacement down the line. Someone who might prioritize growth over inflation control.
Leading to earlier rate cuts, perhaps.
Potentially. This kind of public pressure, it's not entirely new historically, but it always throws an unpredictable element into market forecasts.
Okay, but amidst all this turbulence, let's call it, there was actually a glimmer of good news on the inflation front, wasn't there?
There was, yeah. A bit of counterpoint.
The New York Fed survey of consumer expectations showed median one-year-ahead inflation expectations actually fell to 3.0% in June. That's the lowest level we've seen so far in 2025. Does that help ease some of the overall anxiety?
It definitely offers a counter-narrative, yes. This moderation, plus the fact that longer-term views were stable, the 3-year and 5-year medians stayed at 3.0% and 2.6%.
Okay.
It suggests consumers are increasingly believing that these price pressures will gradually cool off, and that reinforces the Fed's commitment to getting back to its 2% inflation goal. It bolsters the case for eventual rate cuts. Not immediate, mind you, but eventual.
Right. It gives the Fed some room to maneuver, potentially.
Exactly. Provided, of course, that inflation keeps heading in this direction.
So, given these really powerful cross currents, Then you've got tariffs pulling one way, inflation data maybe pulling another, political rhetoric swirling all around. How should you, the listener, the retail investor, try and interpret this landscape right now?
Look, market definitely remains in flux. There's no question about that. On the one hand, yes, easing inflation expectations and the prospect of the Fed maybe cutting rates later this year that provides a supportive backdrop. But on the other hand, these aggressive trade moves, the political pressure on the Fed, they inject significant uncertainty and, frankly, downside risk. It's a very dynamic environment. Policy shifts can create really immediate dramatic reactions.
So caution seems warranted then.
I would say so, yes.
You'll want to watch carefully for any follow-through on that tariff announcement, and crucially, any retaliatory measures from other countries that could snarl up global supply chains even more.
Absolutely. And also keep an eye on signals of the Fed's resolve, how they stand up to this political criticism. Risk management is just key right now.
Yeah.
And maybe this raises an important question for you, the listener, to ponder going forward. How might the global economy actually adapt if these kinds of tariff actions stick around or even broaden? And what ultimate impact could that have on long-term inflation and, consequently, interest rate policy?
That's a truly critical thought to carry forward as you navigate these pretty complex markets. Thanks for joining us for this deep dive. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.